I'm Corbett Wall with DB Auction, here with your feeder flash for Friday, April the 23rd, brought to you in part by Vitalix. Vitalix tubs for increased feed efficiency, decreased feed cost, improved conception rates, improved herd health overall, increased average daily gain, and increased weaning weight. Get the blue tub. For more information, go to Vitalix.com. Mayday, Mayday. This cattle deal is going to hell in a handbasket, and I mean fast. We cannot stop this corn. Corn was up the limit on Thursday, up the 25-cent limit, and there just seems to be no stopping it. Of course, cattle down hard, especially your feeder cattle down really hard. Your fat cattle market cash has stalled out. Your packers refuse to share any of these monster profits that they're making, and you know, they just have no mercy on these cattle people that are having to pay so much for their feed costs and all their input prices up there. You saw the addressed price for fat cattle on Thursday that was paid was primarily $192. Your box beef cutout value for choice was $182. That's $90. 100 times a 900-pound carcass, which is what we had on actual for the last that was reported. That's $810, guys, to cut that stuff up. Now these guys are reporting $500 a head profits. No way, way more than that. It doesn't cost that much for kill costs and things like that. They're making $700 a head, and they want to make $1,000. You talk about greed, and greed is very important for all of your economics, and it has to work or people won't produce more depending on how much more they can make. But your packers have started putting their foot down on the gas on these change speeds. The problem where our greed doesn't work is when we get into the feeding cattle industry, everybody's hedged up and they start basis jumping and things like that. They're in these formula contracts, and so they don't respond, and so they can't respond the way that things should respond. You know, whenever you see the opportunity to make this kind of money, you know packers need your cattle. And you know that there's not that big of a supply of market-ready cattle out there. You would think that guys would refuse to sell, but they don't refuse to sell because they're going to miss the boat if they don't sell, and then they'll be hung up with cattle, and the whole deal is just jacked up. We've got to get this mandated minimum negotiated cash trade deal done. I don't know what we're waiting on now. I guess we're waiting on increased support or what have you, but we got to get one of those two bills passed, either the 5014 deal or the Cattle Market Transparency Act. We've got to get something done, guys. Is there any bright side to look at? Yes. I do believe corn's going to back off next week. Well, for one, here on Friday, your May corn options go off the board on Friday here. They've been jacking around with that deal, and so that'll make a difference whenever they go off. We've got forecasts for 70 and even 80-degree weather in the Corn Belt next week. That's going to make a big difference, and I think your corn's going to back up when we get to that point. But you talk to guys in the country, and most of us just assume that you've got some big-time farmers out in the Corn Belt area that have corn in the on-farm storage and have had it for a long time, just don't want to give it up and don't want to pay taxes on it. Nobody knows it's there. I've always felt that they have a lot of it out there. Most of us feel like there's a lot of it that's not quoted on. Nobody knows it's out there. It hasn't been tabulated. A lot of times guys would feed that corn bowl. Most of those guys have done away with their farmer feeder lots there on site, and they've just they've discontinued feeding cattle, and we keep thinking that corn would show up when we need it. And likely a lot of these big farmers out there that's got millions in equity built up, you know, they're still down in Florida, you know, playing in the water, or they're in Arizona roping or something like that, and they may not have even gotten word of the good news of what they've got, but they don't want to pay taxes on it. But You know, we know this corn's up. It's been up for a long time here. And one of the good rules of thumb is when the town drunk says, you know, hey, this corn's getting pretty high, ain't it? It's just about time to start going the other way. And I think that's probably a fact. But you talk to some guys, you know, I talked to a small farmer feeder there that's in the northern plains, and he told his broker, his commodity man, he says, I need a load of corn. And the guy says, I can't find you a load of corn. Of course, that's not the Corn Belt, you know, that's way north and west of there. But he said, I can't find you a load of corn. He says, I really don't care what it costs. I just need to finish these cattle right here. He says, I can't find it for you. That's scary a little bit. And what's caused this? Well, Japan has sopped up a lot of our corn stocks at cheaper prices there because they need it, and then likely they're going to stockpile it now. You know, that could be a big deal, and we kind of begrudge them for that. We like the demand, but whenever they kind of control things now, China does. I should say, if I said Japan earlier, I should have said China, but China controls everything, and now that they have their puppet in the highest office in the land, you know, they're likely going to control more of it as we go forward. But, you know, they don't grow much corn in China. For one thing, everything's state controlled. You have to be a self-starter to be a farmer. And you're limited in your Chinese ag production to your laziest farmer. If everybody makes the same in a socialist economy, why would anybody work harder than the laziest guy? That's kind of where we're at there. We could go on about this forever, but let me go ahead and give you some of these disappointing markets. And I tell you what, it's just, like I said when I started this, Mayday. You know, if we needed some help at any point, we got to have some right now. How about April live cattle futures down $1.45 at 118.32? Why would your fat cattle futures go down? There's no fundamental reason for it, other than just pressure lent from your feeder cattle going down, your grains going up. You know, we're in inflation right now. We're printing money and throwing it at people. Everything is higher. Everything of any value is higher, yet our beef, our meat is going down. And that just doesn't make any sense. Everything else, all the other foods are going up. But just lent from you know, the way that we produce this beef, and this is a final product. This is market-ready cattle that we're talking about. It's going down. Makes no sense at all. June live cattle futures down $1.40, 115.85. Your June live cattle are down $10.25 in the last 2 weeks. That's $140 a head, guys. You go on your back months of live cattle, down 85 cents to down 125. April feeder cattle, now we can understand why they're down so hard. Down 285 at 132 and a quarter. May's down 257 at 137.02. May contracts on feeder cattle down about 14 and a half since the last 2 weeks there. You know, that could be $120 a head. Guys can't afford that. They would have never planned to make that much money. But now that's the difference in keeping things afloat and losing their ass. Look on your back months of feeder cattle, down 142 to down 355. Here's your fat cattle trade that happened on Thursday. Not significant trade anywhere. I mean, we've traded some in the northern plains, but your southern plains, if we don't do significant trade on Friday here, and it doesn't look like it's going to happen, we're going to hit triggers on that 75% of a robust market that NCBA is looking at, this voluntary program. We've already hit one major trigger. All we got to do is hit one more major trigger in the next 3 quarters, and then they're going to get behind some of this legislation to get a mandatory minimum negotiated trade. Doesn't seem to bother the packers at all, because they don't think that your cattle people can get together enough to get it done. You know, you got 3 or 4 associations out there, a lot of state associations, everybody bickering and beating heads, and your packers just sitting back reaping all the rewards, not thinking that they can get together on it. Well, I don't understand why NCBA sits and waits for a whole nother quarter to go by to get a major trigger when they know they're going to get it tripped. And why don't they just go ahead and get behind one of the bills, or maybe a hybrid of the two bills right now, and get something done and kind of show what they're supposed to be doing to help your fellow cattlemen, instead of selling out to your packers at every turn. Iowa, 7,600 head on Thursday, 18,600 head for the week. Live sales 120 to 122, that's $2 lower. Dress sales 190 to 195, and not much of that 195. Nebraska, 10,300 head on Thursday, 20,700 head for the week. Live sales 120 to 124, but not much of that 124, mostly 120 to 122, and 192 predominantly dress. That's $4 lower than last week. Kansas, only 800 head sold on Thursday, confirmed 6,300 head for the week. 6,300 head confirmed for the week. Negotiated trade out of the Kansas feedlot areas. A pretty good sale barn could have 6,300 head of feeder cattle, no problem. El Reno, Oklahoma City, Pratt, Salina, they do it on a regular basis. We're talking about all the feed yards in the Kansas feedlot area for the whole damn week have only sold 6,300 head. Price is $118 on Thursday. That's why they haven't sold them. Texas, one load of cattle, or maybe two loads on Thursday, 3,700 head for the week, 119 is the price. Colorado, about 1,400 head on Thursday at 121. Of course, they're up there where they need the cattle, and it's just a short haul to get them to some Nebraska packing plants. But I tell you what, pitiful, pitiful. You can tell the packers have no love, no mercy for your cattle people. They really don't care if you go broke. JBS spent over $400 million this week buying a fake meat company out of Europe. That's what they're getting. All they want is their share of the protein. They don't care where it comes from. They don't care which animal protein or which fake protein it comes from. They just don't care. All they care about is making money. Box beef cutout values, choice cuts, I told you earlier, $282.31, up another $1.85 on Thursday afternoon. Select $273.69, up $1.81. Your slaughter, 478,000, 21,000 more than last week, 138,000 more than a year ago this week, whenever we were struggling to keep your employers on the front lines there due to COVID. Actual slaughter information come in for the week ending April the 10th. Your average dress steer weight back up 6 pounds at 900 pounds. How that keeps being so volatile, I'll never know. But let's talk about your feeder cattle market. Your real-time index on DV auction late in the day on Thursday, sitting at 135.79, down $2.11. Ouch. That's a 7-day moving average. All your markets that report into your cattle market central up through the middle 12 states, just like your CME cash feeder cattle index, and down $2.11 in 1 day's trade. Ouch. Talk about your big sales that happened on Thursday. Pratt livestock and winter livestock in Pratt, Kansas there, 4,500 head. Feeder steers $6 to $10 lower. Man, how does Steve Stratford and them guys explain that to the producers that brought those cattle in? They let them stay out there on graze out wheat instead of making a crop, held those cattle, and then they bring them in, and they bring, $70, $80 a head less than what they were expecting. That's a tough call to answer right there. Heifers were kind of uneven there. Let's talk about your automated marker report out of winter livestock and Pratt right there. And you look at your best tested weights, and they were all big cattle. A lot of them coming out off of some late wheat there. 688 head of 8-weight feeder steers out of Pratt, Kansas. Average weight 847. average price on them, 130, 133, and I can't argue with that market reporter. You look at that difference in your weighted average price, it was $8.68 lower than just last week. Dang. 503 head of the 9-weight steers in Pratt averaged 948 at 125.87, almost a full $10 lower on the weighted average price there. Look at the heifers, and they weren't too bad at all. Over 1,050 head of 8-weight heifers there, lots of them, averaged 851 at 122.31. That was only down about $1.50 from last week. You know, I guess they figured it doesn't take as long to feed those heifers and they're going to finish quicker. 858 head of the 9-weight heifers averaged 926 at 121.37, and that was actually higher than a lighter run of 9-weight heifers from last week. Talk about some individual quotes around the circuit. Bluegrass Stockyard South, Stanford, Kentucky. I told you guys, when we start getting into these warmer temperatures, those cattle are going to be on feed in some hot days there. And then you start seeing those eastern cattle start bringing as much or more than they do in the central part of the United States. Check out Stanford's top sale on feeder steers. 61 head, 828 pound steers bring 133.95, and they squeeze every drop out of those buyers whenever they sell them. But hell of a good sale on there. And don't forget, I told you Montgomery Stockyards is going to have 100 loads of yearlings on Monday's board sale. Get in there on some of those. Columbus Sales Pavilion, Columbus, Nebraska, 81 head, 841 pound feeder steers bring 137.25. But the best quote that I saw anywhere, and I tell you what, there wasn't a lot to brag about, but the best one I saw anywhere, your Zach Tran top quote for the day, come out of Broken Bow Livestock Market, Broken Bow, Nebraska, 111 head, 657 pound steers bring 171.25. That's your feeder flash for Friday.